Good morning, everyone, and thank you for joining us this morning on this webinar called Show Me the Money, where we're going to be exploring the financial services opportunities for telecoms operators. So this morning, we have David Pringle, who is a Senior Associate Analyst at STL Partners and heads up our consumer research stream. Hi, David.
Hi, Amy.
And we've also got Liam Mimna, who is a senior analyst at STL Partners and has done lots of work in the consumer space and looking specifically at Vodacom's partnership with Alipay in South Africa. So we'll be sharing about some of that. So I'll just do a little bit of housekeeping before passing on to David and Liam. David, I think we've lost the presentation now.
Okay.
If you can't find it, I'll bring it up again.
Sure why that is, Amy. No?
No? Okay. Well, I'm going to do some housekeeping, and then hopefully in the meantime, David will get the presentation back up. So just to let you guys know, if you can see on the side of your webinar, you've got a little control panel where you can ask questions. So please ask your questions throughout, and we'll be doing a Q&A at the end that I'll moderate with David and Liam. And you guys are in listen-only mode, so no questions out loud. And last but not least, we are recording the session. So if anyone wants to look at it later or get access to the slides, we will be sending those out to everybody after the presentation. So that's the main housekeeping, and I will hand over to David Pringle. David, you're still in sort of PowerPoint rather than presentation mode, so I may help you out there in a second.
Yeah, let me just try. No, still no change. No, I'm not getting it, Amy, for some reason.
All right, so I will get it up for you in a second. Sorry, everyone, for the technical difficulties. These things never go as smoothly as you want them to.
Yeah, apologies for that.
Maybe you can start running through the agenda, David, while I get it up for everybody.
Yeah, sorry again, folks. A little technical glitch there. So yeah, as Amy said, we're talking here primarily about the financial services opportunities for telcos, and I'm going to take you through, or Liam and I are going to take you through various elements of that. I'm going to begin by setting the scene and explaining why the opportunity is now, the context for why telcos may want to move into financial services now and why many are. We're going to look in a little bit more depth about M-Pesa and the lessons from that. That's probably, as you know, the most established mobile money service, and it's now a pretty strong financial services offering. Liam is then going to talk about how the Vodacom Super App is evolving, and that in some ways is drawing on the lessons of M-Pesa and the learnings from Kenya. Then we're going to switch tack and go to developed markets and talk a little bit about Orange Bank and its efforts to build a financial service offering in France and Spain, before finally getting into the role of artificial intelligence and data analytics. So that's our agenda. We will have some time for questions at the end of the webinar, so you can take us back to any of these areas if you're more interested in them. So Amy, if we can just switch to the next slide, please. So yeah, the key thing to understand about financial services is there actually has been a huge amount of disruption in recent years, recent decade, both with digitization and liberalization, i.e. regulation has changed to make it easier for new players to enter the banking market. And we're going to see more disruption ahead, primarily because governments are considering introducing digital currencies, which is partly a reaction to the likes of Bitcoin and other distributed ledger type offerings. Digital currencies potentially create several advantages for an economy. They're essentially a digital version of cash that's underpinned by the country's central bank. So rather than owning notes or coins, you'd have a deposit directly with the central bank. And that will potentially increase financial stability, because it takes out the risk that the bank that you've got money with, a commercial bank that you've got money with, might go bust, or there could be some issue with that commercial entity. So you're with a trusted official platform. Now, in developing countries, a digital currency could help bring unbanked citizens online, because it would remove the need for them to have a commercial bank account. And yet you would still need some kind of intermediary between them and the central bank and their deposit. And telcos and other online service providers could play that role. They could help consumers hold currency with a central bank. They could also support things like identification, authentication, also even potentially providing microloans and insurance and other financial services anchored by that digital currency. And we'll talk a little bit more about what telcos are doing in terms of those financial services as we move forward. And some telcos are already getting into this space, with KT in South Korea, for example, is already involved in distributing local digital currencies there, partly as a reaction to the pandemic and the recovery efforts. Now, taking an STL view of where financial services sits in the opportunities for telcos, we would say it's in the telecom sweet spot. And what we mean by that is there's actually a lot of potential to use connected technology to change the industry. In other words, digitization will have a big, and is having a big, impact on banking and financial services. And yet at the same time, it's more of a national industry, in the sense that it's governed by national regulation. And there's a lot of kind of quirks and variables that are specific to a particular market. So that makes it less suited to your big internet giants and internet players, etc. So in many ways, it's in the sweet spot for telcos. And an important thing to say with that caveat, though, is that it shouldn't be linked to the telecoms network per se. I mean, in our view, if a telco is going to offer financial services, it shouldn't be tied tightly to their network, because people want to offer access to their financial services over all kinds of connectivity, Wi-Fi and third-party networks, as well as the telco network. So it's important that it's interoperable, accessible, and widely available. You shouldn't put some kind of artificial barriers around your financial services. So it's in our view, it's really important that telcos, although they take advantage of their networks in a sense from a distribution and authentication, data analytics perspective, they don't make it dependent on their networks. Right, if we could flick to the next slide, please, Amy. So this is that was the introduction to the context to this presentation. So now we're going to look in particular at M-Pesa. So we can move to that slide, Amy, please. So as you probably know, M-Pesa is well understood. It's been heavily analyzed. It's been around for 15, 16 years. But it is worth revisiting, because it really highlights the potential synergies between telecoms and financial services, and in particular how payments can be a springboard into other lucrative markets. Now, Safaricom is still a telco, but as you can see from this slide, it has made financial services one of its 4 strategic pillars. And within that pillar, it's talking about what it calls next financial services. And these are quite elaborate offerings, things like wealth management, savings, insurance, and credit, assuming they can get the necessary regulatory approvals. And they're also looking at a broader lifestyle offering, a kind of super app, which is something that Liam's going to talk about a little bit later with Vodacom. They're also making providing services and offerings for merchants and businesses, as well as consumers. And the idea is to try and make M-Pesa interoperable with other systems and allow transfers and payments across borders, whereas it used to be a kind of closed network. So M-Pesa is evolving pretty fast, and it is fundamental now to Safaricom and its business. It's just worth noting that Safaricom is partly owned by the government of Kenya, 35% ownership stake. Also, Vodacom has a 35% stake, Vodafone 5%, and there's a free float of 25%. Go to the next slide, please, Amy. So yeah, this slide shows the last 4 financial years, but I want to just draw your attention to the orange blocks, because this is the revenues, the value of the transactions that they're occurring in different segments. And the others section is now a massive part of the M-Pesa business. And there's various components to the M-Pesa, the others section, and this kind of expansion of the offering. I mean, there's, for example, a service called Lipad M-Pesa, which enables merchants to accept cashless payments. There's international money transfers through M-Pesa Global. They've got partnerships with PayPal, Google Play Store, Western Union, etc., to make M-Pesa effectively an international service. And it's providing, as I say, a springboard into other sectors of the economy, which are only sort of tangentially linked to financial services. They've got a DigiFarm offering, which is for smallholder farmers in Kenya. And they've also got this new M-Tiba mobile-based health financing platform, which is basically a form of health insurance, which uses M-Pesa as its base. And the aim there is to transform healthcare in the way that M-Pesa has transformed financial inclusion. So the important point here is that this first a mobile money service, but now a financial services offering, is making Safaricom, or enabling Safaricom, to expand into all sorts of other elements and other sectors. So moving well beyond its original telco mandate. If we could go to that next slide, please, Amy. So I want to really draw your attention to lendings and savings, because this is a kind of potentially lucrative area for telcos in financial services, potentially an area of focus. Now, during the pandemic, M-Pesa zero-rated a lot of money transfers. In other words, they didn't charge people for the money transfers because it was partly mandated by the government, the Central Bank of Kenya, to help the economy get through the pandemic. So in this, the most recent financial year, as you can see, the money, the revenue they were earning from transfers actually went down, and from payments. But lendings and savings kind of partly compensated for that, and is a major growth engine within the M-Pesa kind of family. Grew 30% year on year during the pandemic. And an important part of this is this kind of micro loans concept through this service called Feliza. And the idea here is if you don't have enough money in your M-Pesa account, Feliza will essentially give you a kind of mini overdraft, which will tide you over. It's very convenient. It happens immediately. The next time you top up, it essentially pays back that loan. But it's a lucrative service for Safaricom, because the person is paying interest from the moment they borrow that money. Now, one thing to say is during the pandemic, although the M-Pesa revenues were under a lot of pressure because of this zero rating of transactions, usage of M-Pesa actually soared. The value of M-Pesa transactions overall in the year to March 31st rose 58% year on year, so a huge increase. And in the course of that financial year, $200 billion US, 22 trillion Kenyan shillings went through the system. With the zero rate transactions, we're only actually 20% of that value. But it was a huge growth story during the pandemic, partly because of this this dynamic around the zero rating. Go to the next slide, please. So yeah, I just wanted to kind of zoom in a little bit on the Feliza product, and here you can see its contribution to the savings and lending revenue within M-Pesa. There are other services, but Feliza is the one that really draws the eye. You can see the significant increase in the contribution to revenue here. Now, the reason this is, I think, so attractive to M-Pesa customers and users is it's so convenient and easy to use. And it's also, the more you use it, the more this M-Pesa system accumulates data on you and builds confidence that you're going to pay it back. So then essentially extends your overdraft limit, your credit limit. They saw more than 100% growth in daily active Feliza users, and so now there's 1.4 million people using this service per day. I think the actual growth in revenue was 61% year on year. So this is a really strong offering and something that other telcos can learn from. You just flick to the next slide, Emmy. So yeah, this is really kind of just emphasizing the growth story around Feliza. I'm just going to briefly explain how it works, because this is key to understanding why telcos potentially have a right to play in this sort of micro lending space. So as I say, you essentially, we're transacting on M-Pesa, you don't have enough money in your account, and Felicia steps in to cover the shortfall. And your credit limit rises the more you use the service, because as I say, the system builds confidence that you're going to start, that you're able to pay it back. And as you top up the account, it immediately pays off the loan. Now, what Safaricom does is it charges a 1% access fee. So you pay 1% of whatever you borrowed, and a maintenance fee on the outstanding balance, which depends on the band, the different bands of interest. But a loan of between 100 and 500 Kenyan shillings, which is not a big loan, it's only a few dollars, costs you 6 Kenyan shillings per day, for example. So this is potentially a significant source of revenue for Safaricom. Now, if we can just flick to the next slide, please. So this is the final slide on M-Pesa, and I just wanted to kind of really highlight that M-Pesa is not just a revenue engine for Safaricom, it's also an important source of relevance. It is now, it counts for an extraordinary 38% of Safaricom's service revenues in the 6 months to September 30th. But in terms of it's really done a lot for Safaricom's brand. And now brand finance, which kind of studies these things, it did actually say that Safaricom's brand value fell during the pandemic, partly because of this zero rating of transactions, but it's still absolutely miles ahead of the next Kenyan brand, which is the Kenyan Commercial Bank. You can see the values here. They estimate Safaricom's brand is worth $716 million, and KCB is $209 million. So it's by far Kenya's biggest, most important brand. And it does, because of the actual greater usage of M-Pesa, brand finance expects Safaricom to quickly regain this lost brand value. The other thing they look at is the relative strength of brands. They evaluate marketing investment, stakeholder equity, business performance, etc. And on these criteria, they think Safaricom is East Africa's strongest brand. They give it a brand strength score of 68 out of 100. So really, the important point here is by being a player in financial services, a major player in financial services as well as telecoms, it's catapulted Safaricom into a major brand league, and it's essentially made it one of Africa's strongest brands. So that's really important for telcos who are sometimes struggling to demonstrate their relevance to their consumer base. Now, if we could just go to the next slide, please, Amy. So at this point, I'm going to hand over to Liam, who's going to take you through Vodacom Super App, which actually builds on the learnings from M-Pesa, given the relationship between the two companies. So I'll now hand over to Liam.
Thanks, David. Yeah, so on the 11th of October, Vodacom launched its VodaPay Super App in South Africa, offering digital financial services, lifestyle services, and online shopping under one app. And as you can see, the app offers the ability to pay utility bills, as you can see there in the first screen grab there, and purchase Vodacom communication services such as data and airtime bundles, as well as top up the number of any mobile network in South Africa, and access third-party FMCG brands, products and services via mini apps, which reside inside the VodaPay Super App and sort of is the basis behind the actual name of a super app. In terms of its ability to facilitate a number of smaller apps and brands within the overall VodaPay Super App, and also it gives you the ability to redeem rewards and vouchers. And the idea behind VodaPay is, to meet the needs of both the banked and unbanked population in South Africa. VodaPay is one element of Vodacom's mission of moving from a telco to a techco, and the app is available across all networks. But it's zero rated for Vodacom customers. The company's been working on the project over the last 3 years, and Vodacom partnered with the Chinese player Ant Financial, who operates the Alipay Super App in China. We wrote about the Vodapay Alipay platform in May 2021, and you can find that report free on the STL Partners Insights page. So last July in 2020, Vodacom highlighted it had built a team of around 100 people, mainly software engineers, to work on the program. And then in February this year, as it was preparing to launch a pilot, the team was actively working on 3 streams: the customer journey, merchant sign-up, which is really important in terms of developing an ecosystem of brands on the Super App, and driving traffic to the app, and then financial services infrastructure. So when we move to the next slide, we can just have a quick look in terms of, yeah, if we move to the next slide. Oh yeah, sorry. I thought it'd be a good idea to have a quick look at maybe Alipay, and it kind of gives you a picture of what Alipay has done and what Vodacom is trying to achieve. So Ant Financial's Alipay platform is a leading digital payments provider and digital finance platform in China, and the app reaches over 1 billion users and has about 80 million merchants. As a bit of a background, Alipay grew out of Alibaba as a means of facilitating payment between buyers and sellers across Alibaba's platforms, such as Taobao, Tmall, and 1688.com, and it's the primary method used by buyers and sellers to complete payments across the Alibaba's platforms. Alipay's market share in digital payment services was estimated to be about 55% in 2020, compared to its competitor Tencent, which had about a 40% share. And Tencent operates WeChat Pay or Weixin Pay inside its own ecosystem, WeChat, which you're familiar with. The Alipay platform is built on 3 pillars, and you can see them there in that graphic. So digital payments in the center, digital finance, which you can see is made up of credit products, investment products, and insurance products. And then the daily life services, which you see outside that, which is made up of local services, the ability to buy groceries, go to popular fashion brands, buy clothes, access content, mobility services there on the left, the ability to hail a taxi, buy tickets, public transport, and municipal services such as accessing government services, paying utility bills, that sort of thing. And those 3 pillars, the digital payments, digital finance, and the daily life services, these are the pillars which Vodacom is also implementing with VodaPay. So Alipay's customer daily life services, which you can see there, they're very sticky, and have been key at driving engagement with the app, with 60% of users coming to the app to access daily life services. And according to Ant Financial, Alipay contains about 1,000 daily life services and over 2 million mini programs across the mobility services, local services, and the municipal services. And in terms of sort of the revenues that are generated, Alipay produced some figures for 2019, which showed that digital payment and merchant services accounted for 43% of revenues. Whereas credit tech accounted for almost 35% of revenues, investment tech 14% of revenues, and insurance services 7.4% of revenues. And what I mean by that is Alipay earns money by charging merchants a percentage of the transaction fees, which are core on its platform. And in terms of its credit tech, investment tech, and insurance tech products, these are underwritten by partnering banks, insurance, and financial institutions. So loans, for example, that originate on the Alipay platform, Alipay will earn a fee based on that interest income that's earned. Similarly, it earns insurance income based on a percentage of the insurance premiums and contributions generated on the platform, and also investment fees based on a percentage of the investment products which are sold on the platform. And if we were to look at the credit tech aspect for a second, it's developed some very successful products in this area, such as Huawei and Zhibai. Huawei is a digital unsecured revolving credit line for daily expenditure and for paying in advance if you need credit for any of these services which they offer. It's advanced to customers based on Alipay's customer insights and credit assessment models, and is immediately available to customers. Customers get an interest-free period of about 40 days from taking out the loan, and then can make repayments over 3, 6, 9, or 12 months. And holistically, if you look at it, the financial services, they benefit all the ecosystem participants: the customer, the merchants, and the financial institutions. It enables the customer to buy now and pay later across a range of daily life products and services. And it stimulates commerce on the platform for merchants, because it's giving the user a loan to buy that thing which they may not otherwise have purchased or held off. And this compounds the revenue potential for Alipay, because they're getting a percentage of the transaction value from the sale, but they're also getting a percentage of the interest on the loan. So it's quite financially lucrative for for Alipay. And as well as that, the financial partners, be it the banks, the insurance providers, the investment companies, they're all reaching a new class of customer, which up to now would have been unserved by traditional bricks and mortar financial institutions. And this is also what Vodacom is trying to achieve. We can move to the next slide, Amy. So to look at maybe the Alipay platform and thinking about what Vodacom is getting from its partnership with Alipay. Obviously, you know, and Financial was trying to go public last year, and they produced a lot of documentation in their IPO filing, and they talked about their domain expertise and the people they have who are experts in payments and banking, insurance, and investment specialists who have deep knowledge of payments network architecture, security, product design, fraud protection, monitoring, risk management, underwriting, all those skills which are necessary across the banking, investments, and insurance products. And then in terms of the underlying technology platform, Alipay has developed what it calls intelligent real-time decisioning systems, using AI and proprietary algorithms to assess risk and match products with customers. So through its detailed insights on customers and small business data, Alipay can assess the suitability of a wide variety of credit, investments, and insurance product features for a customer. They can determine a customer's ability and willingness to repay a loan and the likelihood of accepting an offer. Much of the data that it generates or that it gathers is derived from the Alipay platform itself in terms of the interaction with the third-party mini apps and brands, and also with its synergy from Alibaba's other online platforms. And as customers interact and users interact across Alibaba's services, be it other e-commerce platforms or map navigation, things like that, and general searches. It also has dynamic risk management systems which offer KYC, fraud, anti-money laundering, credit models, security, and data privacy. And overall, the technology platform is capable of handling a high volume of concurrent transactions. So, as you know, China has a lot of shopping festivals where there is heavy demand in terms of e-commerce purchases and things like that. And so its platform can handle a high volume of processes and transactions, of around 60 million processes per second. So it's quite a strong platform in terms of its ability to handle a growing volume of transactions. We can move to the next slide and I'll come back to VodaPay. And looking at the consumer proposition on the left, VodaPay provides person-to-person payments, and it has the option of 4 wallets which users can choose, and they have a variety of transaction and deposit limits. And the higher you go up in terms of the level of deposit you wish to hold, the more KYC requirements you need to fulfill. And in terms of making payments, customers can scan to pay, pay via the wallet, pay via a linked bank card, or using VodaPay cashback and coupons, which customers can earn as they're using the app and making purchases and things like that. In terms of insurance products, Vodacom already has an established insurance business with VodaSure, offering covers such as life and funeral insurance. And even this week, Vodacom's CEO said it planned in future to launch investments and savings products and expand on its microloans. In terms of the microloans, Vodacom has been promoting a Voucher Advance, a buy now, pay later product for meal vouchers and select retail items. And it's built on the back of Airtime Advance, an airtime credit loan product, which is probably similar to the product Fazilla, which David spoke about a few minutes ago. In terms of for Vodacom and its Airtime Advance product, there's about 45% of all prepaid airtime is bought through Airtime Advance and has a bad debt rate of less than 5%. And the Voucher Advance, which I spoke about a few minutes ago for the buy now, pay later product, has a similar credit scoring algorithm. You must be a customer for about 6 months and have built up a proven record of buying airtime and data bundles. And there's 2 different types of Voucher Advance options. You can either purchase the voucher straight up and get slight discount on the face value, which gives you additional value, or you can purchase the voucher on credit at the face value and select your repayment period, which might be 3, 7 or 14 days. And in terms of e-commerce, this is coming back to the mini app functionality, and it's all about the FMCG brands, which you can see there on the screen, such as KFC and various other brands and e-commerce businesses in South Africa. Vodacom currently has around 70 mini app partners, which make up the digital shopping mall of daily life services. And Vodacom is encouraging more brands and businesses to become mini program partners, and has a dedicated developer platform which customers can access, or which businesses can access. There's quite a lot of documentation there for developers to get started on their mini app and to get it running inside the VodaPay Super App. Vodacom relies heavily on customer insights and behavior-driven incentives. Just recently, they noted that they have 3,200 attributes about each customer, which is about 5 times more than what they had this time last year. Customers can earn rewards for sharing the app and recommending the app, but also from using the app, as I mentioned earlier, either for paying bills or for purchasing from brand merchants inside the VodaPay app. There's also VodaPay daily deals, which are 24-hour offers, exclusive offers either from Vodacom or from third parties. And if we move to look at the right-hand side, which is the merchant side of the VodaPay Super App, in addition to the well-known brands, Vodacom is also targeting South Africa's small, medium, and micro enterprises, or SMEs, and trying to onboard them also onto the VodaPay ecosystem. So, like Alipay, VodaPay is offering the SMEs access to a large marketplace of customers, and they can obtain credit for their business, and they can access customer insights and drive targeted offers and just reach a whole new audience, or a wider audience. Vodacom, they've already established, themselves in the business segment, and particularly with small businesses, offering insurance, enterprise resource planning. They've got a supplier portal, VodaTrade. They offer invoice financing, loans, POS terminals, which you can see there. Included the Vodacom and the VodaPay Max POS terminal, which can be used for offline transactions. And they currently, they've got about 4,500 small merchants at the moment, and they process about 200 billion rand worth of transactions per annum across their trading business. And in terms of the finance products which they offer, with VodaLend, they're promising to offer customers who apply for a loan a decision within 24 hours, and also business cash advance, which is linked to the VodaPay Max in a way, because quite interestingly, if you've used the VodaPay Max POS terminal for about 4 months, that gives Vodacom an insight into the sort of business that you're generating, and that can help them determine the sort of credit product which they will offer you. So we can move on to the last slide, Amy. Thanks. Yeah, so to sum up, really, this is just a run through again of the services which Vodacom is going to, offer through VodaPay. You can see the payments in e-commerce, P2P transfers, scan to pay, international money transfer. That's not available yet, but it is coming. The lending products, the Airtime Advance, which I mentioned, Voucher Advance, microloans, overdraft facilities, savings and investments products, which Vodacom promises to deliver in the future, and the insurance products, which you can see there as well. And in terms of the overall revenue generation, Vodacom, the goal is to earn merchant fees as a percentage of the transaction volume on the VodaPay app. And they've also mentioned placement and hosting fees for merchants, and they can also generate a commission or on the loans which customers make to purchase products in advance on the app. And there's also commissions on the investment products and the insurance products. And Vodacom is they have an advantage in a way because they have the ability to obtain a higher margin where Vodacom Financial Services is underwriting the loan or the insurance product or the investment product. And there's also potential for advertising hosting fees. And as well as that, on the merchant side, the revenue potential in terms of the financial services that they extend to small businesses such as loans and insurance. I believe recently at the Total Telecom Congress in October, Group CTO Vodafone mentioned that they had around 200,000 users signed up to the VodaPay Super App, which would have been perhaps maybe 2 weeks after its launch. So it's promising, and I guess it's a wait and see. Perhaps this time next year we'll have a better insight as to how the Super App VodaPay has established itself in the South African market. And that's it from me. So back to you, David.
Thanks, Liam. Yeah, no, just thanks, Amy. So yeah, now we're going to switch tacks and look at developed markets in particular through the lens of Orange Bank. So if you just go to the next slide, Amy. So yeah, the challenge in developed markets is that most people are already banked. So that's a marked difference from what Safaricom and Vodacom and others are seeing. So most people already have banks. Now, that didn't deter Orange Bank. It moved into this market about 4 years ago in a partnership with Groupama, which is a French insurance company. Now, it's basically a convenience play in some respects because it's allowing you to manage your bank account, your financial services through your mobile phone. And there's a lot of companies doing this, a lot of neo banks, as it were. But Orange has made headway since it was first launched in 2017. It's got 1.6 million customers in France and Spain, and it claims to be one of the top 5 neobanks in France, adding 40,000 new customers every month. And it's extended about 1 billion euros in loans, or expects to by the end of this year. Now that's important because, as we touched on earlier, lending is potentially one of the more lucrative services here. Importantly, Orange Bank is actually billing pretty much all of its new customers. So they pay a monthly subscription, whereas a lot of neobanks actually provide services for free to get people hooked in the first place. And Orange Bank also claims to be benefiting from the telecoms channel in the sense that every 100 sales they make in mobile telephony, they're also making 35 sales in banking. So they claim there's clear synergies between the two markets. Now, if we can move to the next slide, Amy. This is, however, an expensive thing to do. This slide shows essentially Orange Bank's losses at an EBITDA level and a CapEx level over the last, 2018, 2019, 2020. And as you can see, there's quite a lot of euros being lost here, or let's say invested in this Orange Bank proposition. That is to say 2020 was actually better in some respects because those figures account for a launch in Spain and Africa, and actually there was a reduction of losses in France, so there was some signs of improvement. Orange claims the management costs per customer are now down by 35% from when it first launched. Just flick to the next slide, Amy, please. So this is actually zooming in on this particular year, so the first 9 months, and you can actually see there is a significant progress in the sense that the Orange Bank is now losing less money, and they're actually doubling down on this proposition in that they invested a further 230 million euros in October of this year, so just recently, to kind of accelerate its strategic plan, Orange Bank's strategic plan, which I'll get into in a second. And Orange also bought out Groupama's 22% stake in the business. Paul de Luce, he's the CEO of Orange Bank. He's now talking about partnering more with fintechs rather than traditional banks. And the reason he wants to do that is because essentially they need that expertise, that software expertise and that technology expertise more than they need the financial services expertise. So that's quite an important sort of change in direction for them. They actually acquired a company called Anytime. They've gone into a partnership with a company called Yo United, which is a leading French fintech in the consumer loan space. And they're also looking to partner with various insurtechs, as they call them, they're insurance specialists applying technology to the insurance space. So Orange is it's doubling down on this market and really looking to partner with the new players, the tech experts. And that's again, a lesson, I think, for other telcos, what the things that they've learned over the past 3 or 4 years of trying to crack developed markets. They're very confident that these partnerships will make a big difference. They say by early 2022 they expect to have one of the best performing front to back credit value chains on the market. And what they're talking about there is a kind of slick, convenient loan offering to consumers, and one that they'll then be able to deploy in other European countries. And Paul Deleuze, he described consumer credit along with day-to-day banking as being at the heart of Orange Bank's development model. So again, credit and insurance is going to be a big part of the Orange Bank proposition moving forward. Just switch to the next slide, please. Now, this is the big challenge facing Orange Bank and other neobanks as well in developed markets. Essentially, what this is showing is a review on Google Play, and it's a customer complaining that Orange had this requirement that you made 3 transactions by card per month, and saying that what the requirement should be 1 transaction per month, which is very little. Orange has actually changed that, realizing that 3 was too much. And this highlights the problem that these banks, these neobanks, are often a secondary banking option which are used for particular transactions and not many transactions. So, and the problem there is if you are the secondary player and somebody's running their main bank account through something else, then you're not getting the data that you need to really understand how creditworthy this person is, what their lifestyle's like, whether you should be making them additional offers and provide them with particular services. Even so, we think Orange Bank could succeed. It has clearly found a gap in the financial services market, as evidenced by the fact that it is bringing on customers at a steady pace. I think the key to success is ultimately going to lie with the quality of their data analytics and the extent to which they can apply machine learning, which is not an area that telcos are particularly good at. I'm going to get onto that in a moment before we get to your questions. However, Orange has been around a long time. It's a regulated player. It's got a strong brand. It's probably better placed than many fintechs and startups to get explicit permission from consumers to use the data that they're generating, and that's absolutely critical in this market. You need, particularly given the European General Data Protection Regulation, etc., you need consumers to buy into this and to be comfortable with you using their personal data. And Orange is a strong and trusted brand, particularly in France, so that will help it. Now, if we can just flick to the next slide, please, Amy. So this is the final segment of the presentation where I'm just going to drill down a little bit more on artificial intelligence and data analytics. So next slide, please, Amy. So this slide summarizes what we describe as telcos' strengths and weaknesses in this space compared to some of the other players that they are essentially competing with. And you'll see that there's 3 areas they're really lacking in. One is industry knowledge, i.e. knowledge is financial services. Another one the telcos aren't particularly good at is consumer app development. Most telcos' consumer apps are not very good or very compelling. And then the third area is data analytics and machine learning. Now, we're going to focus in particular on data analytics and machine learning. And the problem there is there's a limited supply of talent in that space. It's very expensive. It tends to gravitate towards big tech and investment banks. So it's actually quite hard for telcos to get the necessary talent. So the solution we would suggest is partnering with specialist fintech players, as Orange Bank is doing. And that will bring together a combination of the telco's behavioral data, the data they're capturing from their networks and their service propositions and their distribution channels, and you can combine that with the expertise in data analytics and machine learning from the specialist player. Having said that, telcos may also need to partner with banks, partly for the industry knowledge part of the equation, and partly because they may need a financial services license to offer savings, loans, and insurance products, and in some cases to get the necessary liquidity as well. But telcos do have some key advantages in this space, particularly over fintech startups, because they're already collecting the data that they need for their core telecom services. They have strong brand names, they have the distribution channels, so they have a lot of economies of scope. So that is a significant advantage, and that's why these fintech players may want to partner with telcos. And from the consumer perspective, the telco brings convenience because you're already using your mobile phone, they already know a lot about you, you don't have to kind of fill in lots of information and provide lots of data about yourself. And potentially telcos can provide cheaper products because they already have these distribution channels and they have some of the data they need to decide how creditworthy you are. Just flick to the next slide, please, Amy. So this is so this is just summing up this idea that you basically AI feeds off behavioral data, which telcos have, and we're getting a lot more behavioral data, obviously, with the greater usage of online services and the advances of the Internet of Things. People got connected cars, for example, which can help with things like motor insurance offerings and tailored propositions. Now, the challenge, however, is actually essentially having the right data points. And it's interesting the kind of things that actually make a difference in this space. I mean, the head of Vodacom actually said that people who get up between 4 a.m. and 6 a.m. in the morning are more creditworthy than people who get up at 7 a.m. in the morning. Now, that may not be intuitive, but that's what he found. Wipro, which is a consulting business in India, systems integration player, they recommend looking at things like what friends your customers have, their connections on social media, the number of hours of usage of a mobile phone, even the type of mobile phone, their call details, their battery patterns, their apps, etc. So there's all sorts of data that actually could be relevant in this space as to how creditworthy you are. Now, sorry, can we flick to the next slide, Amy, please? Now, there is this a good example of a specialist in this space that's applying AI to lending in the context of working with banks, this company called Upstart. Now, it's actually looking at 1,600 variables, which it's trained on almost 15 billion cells of performance data. And it's been going for a number of years here. And it's actually, this model allows it to lend to people who traditionally, their bank customers would not have lent to, people who would not have been deemed creditworthy. But because Upstart's AI model has figured out the likelihood of a default on a loan, they are able to do that, and they set the interest rates accordingly. Just flick to the next slide, Amy. As a result, Upstart's seeing some pretty strong growth. Actually, this shows their revenue over the last, I think it's 7 quarters, and as you can see, they're going pretty fast, and also they're actually making money, which is relatively unusual for a fintech, and that's partly because, as I say, they're partnering with banks. But the key lesson from this is that Upstart's growth suggests that banks can't do this in-house. They're a bit like telcos. They don't have the AI expertise that they would need to do this. So it is a job for specialists. And that's why, again, we think it's important for telcos to partner with specialist companies. Not necessarily Upstart. There's other players out there. Upstart is just one of the fastest growing, more eye-catching examples. It's also publicly listed, so it's making quite a bit of data on its performance available. So if in the interest of time, I'm just going to flick to the last slide and our conclusions here. Now, this is a kind of, I'm not going to run through all of this, but this is a kind of checklist, a high-level to-do list for any telco that might be considering getting into financial services. And there's some kind of housekeeping hygiene factors up front, which is more about actually having a solid, robust relationship with consumers around billing and transparency. And then you're moving into having a flexible, scalable, cloud-based IT architecture, and then building the partnerships that you would need, either to get a banking license or to get the AI expertise. Important to run pilots as well and understand exactly what works in your particular market, because financial services is actually very local, very national in nature, and different things work better in different markets, and there's different gaps that you might need to exploit. But in summary, we do think telcos have an opportunity to play quite a major role in coordinating the delivery of financial services, and they can help the capital markets reduce the risks involved in essentially lending or offering insurance, etc., to hundreds of millions of customers. They have the data and the distribution channels to do that. And also from a customer relationship point of view, if telcos can help consumers manage their financial affairs better and ensure their property and their assets, etc., then you've effectively got a broader entree into a broader consumer asset home management e-commerce proposition, as Liam was describing earlier with the Vodacom Super App and what they've learned from Alipay. So strategically, we think this kind of expansion into financial services is actually a pretty important opportunity for telcos. It's a big picture thing that telcos should be looking at, because it is there is a lot of synergies with telecom services, and it is a springboard into other important markets. So that concludes our presentation. So if we can flick to the next slide. Amy. So yeah, this is just really an opportunity to take any questions you might have. So I'll hand over to Amy, who's going to moderate.
Thank you very much. So I'm going to stop the presentation so we can take the questions and handle them one by one. So I think first off, I have a question, dial right back to the beginning where you were talking about the move towards cryptocurrency, David. So have you guys seen any adoption of cryptocurrency in the financial services that you guys have mentioned, or the Safaricom apps or the Super apps, or, the Orange Bank, or any of them kind of thinking about how to integrate cryptocurrency?
Yeah, I mean, I can touch on that. I mean, I think the way to think about cryptocurrencies is it's essentially, at the moment, it's a kind of speculative play that's really in the virtual world. And there's still a gap between that virtual world and that kind of speculative markets and the real world. And most of what telcos are dealing with is real world day-to-day transactions. The whole cryptocurrency thing tends to happen in a kind of separate, almost bubble, separate kind of place to the real world. And one of the challenges that industry faces is actually building better links between real world finance and actually day-to-day transactions and what they're doing. Now, part of the problem with building those links is they invite regulatory attention and they invite regulators to get involved. So at the moment, those two worlds are kind of running in parallel. And although cryptocurrencies are providing a lot of lessons for central banks considering digital currencies, at the moment, to my mind, it's not really impacting the telco's opportunity in financial services or where they should play. As I mentioned earlier, people like KT are looking at things like distributed ledger technology in the context of distributing digital currencies going forward. But at the moment, the whole crypto thing is this kind of slightly speculative world of its own, I think.
Just to add to that, I did see it being asked as a question. I think it was at the FAQ on the VodaPay website, and while Vodacom say savings and investments products is coming, when it came to the cryptocurrency question, there was no immediate plan to offer any sort of cryptocurrency facility in terms of down the line. But that being said, when you look at the sort of where Vodacom want to go with offering people the ability to make partial investments in shares and things like that, and small investments, and you look at competitors perhaps like Revolut or PayPal, and they're sort of opening up towards the purchase of cryptocurrencies, and it may be something that they may have to look at in terms of providing a payment service that's relevant to people, that sort of meets what actually consumers want to do, which might be to purchase and to dip their toe into cryptocurrency, of those who haven't already done so. And in a way, it would perhaps open up a potential revenue opportunity, and just an opportunity really for customers. So while they've said that they have no plans at the moment, perhaps it should be something that is looked at, because as I said, their competitors in the market, and perhaps like the likes of Revolut, will definitely be offering those kind of services.
Great, thanks guys. So we've got 5 minutes. I'm going to try and get a couple more questions in here. We've had a few people asking about the regulatory frameworks, thinking about what are the regulatory hoops that telecoms operators have to go through to operate in this space. What kind of licenses do they have to get? And also, whether you see regulations evolving either relating to this, cryptocurrency story or, anything else post-pandemic, if anything has changed during the pandemic.
Yeah, I mean, I can touch on that. I think the key regulatory requirement in the financial services space is around the know your customer and anti-money laundering type services, and that particularly telcos are actually particularly well placed to deal with that in the sense that they already run fairly robust authentication systems, and they have a very clear idea who their customers are, etc. So in that sense, they are relatively well placed, but they do really in nearly every market need a banking license, and this is one of the reasons Orange had partnered with Groupama originally, and that is a challenge because getting a banking license from scratch can be laborious and time consuming and actually involve a lot of bureaucracy in many different markets. So that's why telcos may wish to have that kind of partnership. When it comes to cryptocurrencies, I mean, regulators don't actually really know how to regulate cryptocurrencies today, and are really kind of struggling with that. And I think one of the things telcos may be able to do is actually, if they can potentially help regulators understand and adjust to that market by building up expertise and understanding in that space, as people like KT and I think Telefonica are also doing. So in some ways, because telcos are often regarded as trusted partners of governments, in some cases partly owned by governments, they may help governments come to terms with the implications of this decentralized finance that we're seeing.
All right, thanks, David. So I'm going to put a last question to you both. We've got a couple of skeptics in the question boxes saying things like, okay, we all know about the Safaricom example. If it's the only one that's successful, is this really worth it for telecoms operators? Someone else is saying, okay, can telecoms operators really compete against banks? What can they do that a bank can't do? And this is really a niche opportunity. Can you make the argument any stronger? So, what would you say to the skeptics?
Well, I might just say, sorry, David. If you look at, I suppose the VodaPay is going to be interesting, and the proof will be in the pudding. I'd say, in the next 6 months to a year to see how it has developed in that market. And they are trying to. I mean, M-Pesa didn't work in South Africa because of the highly developed banking market in South Africa, but also there's still a market there for the unbanked and underserved customers as well. And given how Alipay has worked out in China, and I know obviously they've had the advantage of the Alibaba group and the whole e-commerce market there, which took off, and they were there at the right time, the right place, perfect timing, and they were able to build on that capability to build what Alipay is today. I mean, if Vodacom can transfer that kind of that super app, lifestyle app, financial services app into South Africa, and straddle both the unbanked and the banked, with bringing in brand partners and things like that, it could be a very compelling proposition, and it's really going to be down to them to see how they bring on brand partners and small businesses and give something that's really beneficial to customers and that they can see a real tangible value in using. So I guess yes, M-Pesa is obviously the key one that stands out, but I think it'll be interesting to see what happens with VodaPay for sure. Sorry, Dave.
If I could just add quickly, Amy. I mean, I think Orange is an interesting one because they had a key decision to make this year, and they could have pulled out of Orange Bank. They've 3 or 4 years of experience under their belt. As I showed, they lost quite a bit of money so far, yet they chose to double down, and they did that for reasons, obviously, because they believe in this space, and they're in developed markets, which is obviously a tough segment to crack. So that is quite a strong vote of confidence from a telco that's got quite a bit of experience now in this space. So I would not say that M-Pesa is the only working example here. I mean, Orange Bank, it may succeed or it may fail, but Orange has obviously seen enough to keep it in the game and actually investing more in that operation.
Great. Well, thank you both very much. We've got a couple of extra questions on the insurance opportunity and a few others, so I'll pass those on to David and Liam, and we'll try and get back to you guys offline. So thanks very much, everyone, for attending, and thank you, Liam and David.
Thanks, guys.
Thanks, Liam.
Bye.
Thank you. Thanks, David. Bye.